Morning. What a rush. How are you doing? So, really late this morning. Really late. Cough's back. It's all going wrong this morning. Haven't even looked at the charts. 5 minutes to the open. Where do I start? Morning, everybody. Morning, Ian, Amy, Kennelly, Danny, JC, Peter, Yotko, Gregors, Martin, Virginia, Neo, Evil. How are we doing? I thought I was going to cough again. Quickly, let's look at news before we get going. So this morning we've got German IFO. That's the only thing we've got this morning at 9 o'clock, which doesn't really do an awful lot. So the main news today, I haven't even got my pen open, is 115, which is the euro interest rate. Wait. So that's coming out 115 today with the monetary policy statement. So that will come out as a 4.5. Very unlikely we're going to get anything other than a 4.5. There may be something in the monetary policy statement that the market likes or dislikes, which then we may get a reaction at. But the main impact for the euro today will be at 145 when Lagarde holds the press conference. That's where the reporters will probe her to see if they can get any information about forward guidance on interest rates a little bit more accurate. So the market will react when that's finished, usually. In between that, we have the GDP and unemployment for the US at 130. So all of this happens pre-market New York. So this morning's DAX, I expect, will either be a very quick move and then virtually nothing, or it'll be virtually nothing until we get that announcement, because this has got the potential. It's very unlikely it will change, very unlikely, but it has got the potential to make the euro a lot stronger or a lot weaker. So the last thing you're going to do is buy an absolute ton of stocks using euros when at 3 o'clock this afternoon, the euro could be worth much more or much less. So you're going to hold that decision to buy stocks. So we tend to get flat markets. So that's today. We've also got new home sales at 3 o'clock. And we've got the CPI for Japan coming out later. They're forecasting that to go down. Again, it's marked as an orange because they really need to update this. This is marked as an orange and has always been marked as an orange, the CPI, because Japan has never changed its interest rates. We've been 7 years now. We've had 0.1 negative interest rates. They don't use interest rates to control inflation. Therefore, inflation isn't actually as important to the currency because the interest rate doesn't get changed, which affects the currency. So now, however, they're talking about changing interest rates. So we're interested in this now. So this really should be changed to red because now they are going to start to use interest rates to control inflation. This is a big, important figure. If that comes out at 1.9, that's at target, which means that they can increase their interest rate to 0.0, which is what they said. So we need to keep an eye on this tonight. Ueda or Suzuki might come out and say something overnight regarding the interest rates, which will completely rally the yen or dump it, one or the other. So again, that's quite important this evening. So just bear that in mind. I haven't looked at news overnight. Let's have a quick scan. How did Tesla get on? Miss again. Oof. Tesla's missed fourth quarter revenue estimates. Weak auto sales estimates and warns of lower volume growth. That'd be bad. NASDAQ. IBM rises after earnings estimates topped. 6% drop. So let's have a quick look at NASDAQ. So we dropped off last night. Excuse me. That might have been part of it, although it might have just been an exit. I don't know. But anyway, no real impact on the NAS so far. So other earnings we have today. Oh my God. Where are we? There. Other earnings we've got today. We got Blackstone pre-market and Intel after. So that's it. So IBM and Tesla after markets were the main impacts yesterday. And obviously they're not really doing a lot. So that's the Dow, IBM, and Tesla, NASDAQ. So nothing else really to look at for stocks. We'll watch the open for the DAX. Yesterday I banked 0.5%. I'll show you how in a minute. But we'll watch what's going on with the open. So big bull day yesterday for the DAX. We've got a gap fill in play as well to the downside for the DAX, which is 125 ADR today. No real movement on the FTSE yesterday. Beetroot juice. I like beetroot. Short on the DAX. Got that jump down quick. No trade yet on the FTSE. Gonna look like the Joker. Morning, Christian, Mumo, Antonios. Excuse me. Gotta get rid of this stupid cough. Long FTSE. I'm not expecting a whirlwind today. So what I'm hoping is we just get one of those grindy days, or we obviously haven't had the big strong opening cash balance straight to 2R and then stop move. So that's not happening. So hopefully we just get a little bit of a grind down to target. If I can achieve a 1R today on things, to be honest, I will probably take it off because I think we're going to be flat this morning. I don't see any reason why the market should rally ahead of the euro announcement. But we have got a lovely big downside target on the DAX today, so we'll see where we go. So no volume at the moment. So just quickly to recap yesterday, DAX yesterday was a dream, lovely clean break at the open. So we broke. It did take an hour and a half to get anywhere, but because it took an hour and a half to get somewhere, I put all my money on the 2R and I took the whole lot off at 2R. I wasn't around to watch it while it was happening, so that's why I put them both there, because I didn't really want to just sit and watch. But it actually just went straight up. There was the target 5R, straight up to 5R. If you'd have had a 1R, a 2R, a half R trading stop, whatever trading stop you had on that second half yesterday, you hit it if you held it. So well done if you held it. That was a 2R and a 5R, so +7 yesterday. So nice easy move on the DAX. FTSE I got hedged on. Couldn't get out the FTSE yesterday. So we had a push up, push down, sat around hour and a half. We dropped down into the pre-market low. W bottom, pre-market low, came back out, hovered around for a bit. New York open, took us up into the highs, hovered around for a bit, dropped. Just wasn't an exit. So if you actually measure the range there, that was your range. So out of that's 150. So out of the top of the range, we managed to move 5. Out the bottom of the range, we managed to move 200. So about 1.5 R, roughly. That's all the movement we got yesterday. So very hard to get out of that. FTSE's pushing back down. NASDAQ yesterday got out the hedge. So yesterday we looked at a 5R target. So got hedged. We broke short, didn't get anywhere, came up, hedged, got out of the longs there on the double top. So we double topped, came down, so I exited the longs. We pushed up. Original target for me was here anyway. So it hit where I was originally going to go to, which was ADR. If you remember yesterday, I said all of these, we just got to go for ADR to the upside because there is no upside. We're at all-time highs. So I said, when we get to ADR, we'll probably get exhausted. We hit ADR, we got exhausted. So I got out there, obviously trailed in. Aggressive exit was taken at ADR and exited. So that was a nice, easy in and out. Again, lovely big flush if I'd have held it, but I didn't because I'm not an EA. S&P, same story. ADR to the upside. exited at ADR, aggressive exit and out, nice and easy. And the Dow, can't even remember what happened. Oh yeah, Dow, couldn't get out of the Dow at all. So we hedged, went down, came up, basically, so I'll show you the reason I did what I did here. It's a good little kind of learning point as such. Well, not so much learning point, but just good a good use of multi-instrument analysis. So if you look at where we are here and where I got out on the Dow, the reason I exited the Dow there is because these two hit ADR and dropped. Hit ADR, dropped. This one put in a lower high. Okay. So we had a lot of power weakening, a lot of power weakening. So this was highly likely to weaken because it didn't even manage to get a new high. So this instrument was weaker than the other two. So I decided to exit the longs with a loss and then exit the shorts with a profit equidistant to that loss. So basically got out of it with a break even. Yeah. But the decision to get out there was based on the fact that those two had hit ADR and were starting their pullbacks. They all move roughly the same, don't they? So that was the reason for the exits on those yesterday. There we go. So we'll see how we get on those this afternoon. So still short on the DAX, still long on the FTSE. Quite sure how I didn't get triggered that. Spread, look, didn't get triggered on the sell stop, look. It did come out the lows, but didn't quite get the trigger. Andy, long only on that at the moment. Right, so there's no volume. So the DAX, we're basically, at the moment, we're teetering on the 2-week high. Look, this is where the pre-market, I mean, that isn't pre-market, but that's where we are hitting. So we might find we can't get through that level today. That's 2R to the downside. So it's going to be a tricky morning, I think. We'll see. FTSE's rallying. So FTSE upside target for me for 2R is the high of yesterday. So I'm just going to move that TP down ever so slightly just to make sure that if we double top to the pip and we get a load of limit orders, just drive straight back from that level. I want to make sure I'm out on the spread. So I don't want to get the double top hit and it missed my TP by half a pip or something ridiculous. So just moving it down ever so slightly just to make sure I get a hit. Right, we'll come back to those in a minute. Hola, Calamera. What do you think about GA? Don't know. I haven't looked at anything yet. Let's have a look. ADR reversals, hedging. Just move my platforms around in the right order. Hedging. H1M5. Excuse me. Morning, Baggy. GA, let's have a quick look at that. I think it's going nowhere. Absolutely sideways. Dead. Nothing. What am I going to say about that? It's just literally it's sideways. So sell the high, buy the low until it decides what it wants to do. There's no news catalysts for the Australian dollar and there's no news catalyst for the pound this week left. So nothing you can do with that. It's just dead. Dead in the water. Wait. Not part of my strategy anyway. Morning from Switzerland, Rico. So let's have a look at yesterday quickly. Big day yesterday. We had a lot of retracement on a lot of stuff yesterday. So paid out on loads. So bank 2.37% on a H1M5 mean reversion, bringing it up to 5% for the month. ADR reversals banked 6.25% bring me up to 10.78 on the month on ADR reversals. H1 hedging banked 0.75%, bring up to 6.5. So 20% month, which is good. The main issue that I have at the moment still is pound yen. Again, same thing, because we're going sideways. We're not going anywhere. Yesterday, we had the rally on the pound news completely undid. Looked like the yen was about to break, and then it bounced. So this low, this propulsion gap out of this accumulation, where the market tried to rally into new highs, made a new higher low, double topped, lower low, lower high, lower low. Hopefully today we will get that break. It is rolling over ever so slowly, but there's just no strength in that yen. So fingers crossed tonight that CPI figure helps them increase their interest rate faster. So we'll have to see what happens, but the yen just can't get going at the moment for some reason. It's just stalled out completely. So that's the main problem I've got, 3.37%. US dollar yen's in 2. Again, stuck, totally stuck. I got out of some of the US dollar yen yesterday and did some drawdown control on an older position. So I did some DD control yesterday as well, just to reduce the risk a little bit. I thought I reduced some on the pound as well, but I obviously didn't. I didn't do anything on the pound yesterday. So yeah, so that's the exposure on at the moment. ADRs today, there are none. We have one weekly, which is a CAD Swiss. So that's hit its weekly range. So we are on Thursday. So basically, that was the weekly high, Tuesday. So basically pretty much where we opened Wednesday. Yesterday, it did the lot. It did its entire weekly range yesterday. So, yeah, good looking potential long opportunity. I've got one long on it already, which was taken yesterday, which is an ADR reversal and H1M5 mean reversion. It doesn't matter what strategy you're using. You probably got on an H4 as well. Oh. Yeah, you got on an H4 as well, but you would have got in down here. So, yeah, big drop. We should be looking for a pullback on that. If it doesn't and just accumulates and drops down, that will be our target as I scale in and come back up into that, probably from this low ADR today. So we'll see where that one goes. Obviously, the Canadian dollar, if you look at all the CAD pairs, big drop yesterday, Aussie dollar CAD rally. So everything Canadian dollar dropped yesterday on the back of the CAD news. So Canadians kept their interest rates as standard. Bank of Canada press conference, they didn't rally it in any way, shape or form. They didn't say anything negative either, though. So it was very, very neutral, but the banks and institutions just didn't like what they saw yesterday. Doesn't mean they're not going to undo the entire thing and just carry on anyway. So that's your only weekly hit. There's no ADRs to look at. RSIs are also flat because most of the moves that we've had paid out yesterday, which is why I had such a big day yesterday, because everything that I put exposure on, obviously, all the trades started to play out. CAD Swiss is the only H4 RSI extension, H1 RSI extension you've got, which is just about below the 30 now, but obviously that's come out. So your entry would have already been triggered on that one. So that's the exposure. Half of my drawdown is pound yen, and basically 2/3 of it, or near enough 3/4 of my drawdown, is US yen, pound yen. So it's JPY is pretty much all my drawdown. Everything else is just hovering, waiting to do something. So nothing particularly worrying there. Just quickly see what's going on. Hedged on the FTSE. The market's dead. What should I do with this today? I'm just going to leave everything at 5R. Not far away from ADR at 5R. The downside is previous day's low. Upside is accumulation and just ahead of the weekly low from 2 weeks ago. We've got a propulsion gap in the way, which might stop us getting to target. And we've got yesterday's low in the way, which might stop us there. I very much doubt we will get out of that range, which is the previous day's range, before the European interest rate announcement today. So if you want to try a quick exit, yesterday's low and yesterday's high, if we get to those levels, you've probably got a good chance of getting out. Look at yesterday. I mean, that's exactly what yesterday happened, isn't it? Yeah. So assume that we're going to do the same before 1:15, if you can get there. I'm just going to watch it this morning for the moment. I like beetroot juice, but it's got a really metallic aftertaste. Really good for your blood flow, but you have to start thinking about these things when you get to my age. Only 50. Anyway. So that's the H1M5. I see on H1 Hedge and ADR 125 use 0.2 per 0.5% ADR. That's basically what it was using on the VPS. Up to you, risk. I'm being aggressive on these. I might regret it, but these are smaller accounts as well. So I've got 2/3 of my money here, and the rest split over the other two. So I've got more aggressive money there. But with hedging, higher risk is okay as long as you're happy to take higher drawdown, which you will. And you will be in higher drawdown for a lot of the time. You're going to spend most of your time in 10 to 25% of drawdown on the hedging strategy, because when you think about it, you're always going to be wrong. Every time you're in a trade, virtually most of the time you're wrong. I've got 2 shorts on and 1 long. I can guarantee you one of those is going to go into heavy drawdown as the others go into heavy profit. So as soon as I take off the heavy profit, that figure jumps through the roof. Yeah. So you're always going to be in big drawdown. But that at the moment, that's not an equal hedge. So that's not a good example. I haven't got an equal hedge on at the moment, but when you have an equal hedge on, obviously that is locked in and that doesn't change, because if you're equidistant long and short, it cannot go up or down. So it's a different strategy. But up to you. This account, this strategy, this set file that was running from March till December last year that made 150% profit on the account was using these exact settings. However, I will be manually intervening because I'm a trader, not an EA. So I may get better results. I may get worse results. Don't know. And the same with the ADR reversals. I'm using the exact same set file. With ADR reversals, we expect to be out faster and quicker. So taking money off a lot quicker and sticking it down there a lot quicker. But this got into big drawdown as well. So this was up in the 20s at some points. So yeah, up to you what you want to do. But with H1M5, I'm keeping the exposure lower because it's a bigger account. Come on, DAX, get a nice break so I can not worry about the hedge for the rest of the day. So yeah, so there's nothing else to look at today on ADRs. There's nothing to look at on the RSIs. Very, very flat. Thanks for subscribing, Smoogiani. I think I said that right. ADR reversals. Yeah, big day on ADR reversals yesterday. Banked an absolute ton of reversals. Got out way too soon on most of it, as usual. It's what I do. It's what everybody does. But yeah, big day yesterday. Lots banked. Swiss franc, nice and strong. CAD very, very weak. A lot weaker than expected. But you know, these exits that I've got here, there's absolutely nothing wrong with these exits. That there is 50 pips. That's more than an ADR. It's 125% of ADR. That's why I got out because we'd hit 125 ADR. Yeah, we know that when we get to 125% of ADR, it's quite difficult for the market to push further. But 225 ADR yesterday. Who would know you're going to get a 225 ADR day? So I was out absolutely happy with the profit that I got. Yes, could have made more, but if you'd have known that, you'd have held it. If you'd have known that, you've got a crystal ball. We haven't. So, yeah, so it's just sitting at 5% of DD on that one at the moment. There's nothing in any major problems. Again, pound yen is the main annoyance. There's not a lot I can do about this pound yen at the moment. I've banked something this morning for 0.3. What's that? US dollar yen. So I'm out US dollar yen this morning. That's a beauty. Look at that for an ADR reversal. Yeah. So ADR, M5 reversal, out. ADR, M5 reversal, out in propulsion gap. Yeah, propulsion gap target. 2 days, 2 trades, 100% strike rate. I like it. So yeah, US dollar yen out this morning. And hedging is only in 2.6. There's nothing to bank at the moment there. New Zealand dollar CAD. The longs I'll get out in that propulsion there. So just gone short on this one. Obviously because there's been a reversal alert and I'm long from here and I'm long from up there somewhere. So average long is there. So I'll get out in that propulsion. And when we get to that propulsion and exit that long, we'll have pushed up. So I'll wait for the next reverse alert to trigger to get in another short, which will bring the average up to there. And then I'll get out on a pullback on that leg on the shorts. Right, there we go. Okay, new lows on the DAX at 1R. Today, isn't it? Grateful Buster passed a 50k prop yesterday. Good man. I know about the caution of props, but I'm giving it a chance. Use top step. Cool. Go for it. Nothing wrong with prop if you can make money out of it. Don't expect to hold that account. As long as you understand it is a gambling account. That's if you treat it like a gambling account, you'll make money sometimes. What are the key areas for pound odd? Currently in short drawdown. Well, it's last week's high, basically. I mean, there is none. We're above yesterday's high and previous day's high. We're in a tiny contracted range on this, which is 88. Just over half an ADR in 2 days. I mean, this thing's just not moved. For 3 days, you've done literally 3/4 of an ADR in 3 days, half an ADR in 48 hours. It's just not moving. We're attempting a breakout of the highs now. If that fails, we'll probably come down and test these lows. That's not going to help you out. So last week's high is all you've got to the upside, which is just shy of ADR today. But yeah, I mean, it's just a horrible grind, this thing, isn't it? I mean, it's just, this is January market in a nutshell, isn't it? What we've had is either stuff doing this and going absolutely nowhere, or we've had stuff which has made a move and just ground away. Yeah, so you just don't get any alerts on RSI. It's pushing very nicely up. And we've had, you know, it's a big move up, but it hasn't been strong. It's been like that. There's just been nothing but buyers, but not a lot of them, but enough of them to do that. Horrible, grindy. This is where most of the nasty squeeze is happening, grindy moves like this, because you literally can't do anything about it. You're stuck. So, I mean, I had an entry there off of that one and out. But I mean, if you look at what I took there, it's probably 3/4 of an ADR, 100 pips, 125 is an ADR. Yes, I took 3/4 of an ADR out of that. Probably took 3/4 out of that. Yeah, 97. So I took 3/4 of an ADR out of that one as well, because it was that was the propulsion move that I said that doesn't look like a move because it's not the right direction for the news. So they filled it. And since that, we've got nothing. So if you're in from, I suspect you're either in from there, you might even be in from somewhere down here, but you should only be in, what's an ADR, 125? Look at, I mean, that, if that was first entry, it's 1, 2, 3. It's not even 4 ADR from where potentially you would have had your first entry. Maybe 5 ADR if you decided to get in on that 70 extension. But in 5 ADR, you should have no more than sort of 6 to 8 positions on max. But even so, it would be quite squeezy. So, but not a lot you can do with it. Just got to wait for a double top. If you're in drawdown and you need to do something about it, I would look at doing an aggressive drawdown control position there, and then taking that aggressive drawdown control position off around an ADR down and use that to reduce that down to get out of some, which is exactly what I'm doing with the pound yen. So same principle as I've got on the pound yen at the moment. I've got the aggressive drawdown control position here. Luckily for me, it brings my ADR within my average within ADR. So if I can actually get the propulsion fill, that actually gets me out of the whole position. But if my ADR was, my average was down here somewhere, for example, I would still be getting out of the aggressive drawdown control position on that propulsion gap fill in case this area here holds as support. At least then I can use all of that money, which in this case would be $2,000. With this, in this case, obviously, I'm not in as much drawdown because it's my average is up there. But if my average was down there, that drawdown would be $4,000 or $5,000. So I can use $1,000 of that $2,000 at somewhere around half of it or whatever to remove half of that. You know, any positions below your average, just chip away. And then there's 2 scenarios, isn't there? Once it gets down to there, it either bounces and you can get that position back on again and have another go and do more aggressive drawdown control, or it's going to do that and come down, in which case all these come into profit and you just exit the position. You don't know what's going to happen. We don't know what's going to happen with the yen. The yen is the most unreliable currency in the universe, but for me, this is looking good. Yeah, we've got to this level that we sold off. This is when the US hit 150. We sold off. Yeah, we've got to that level. We've rejected it. So the limit orders have triggered there. We've tested it again. Limit orders have triggered for a second time, and now we've got a new lower low gone in and a lower high. So market structure has shifted south. So exactly the same has happened here. Yeah, high, low, lower high, lower low, lower high, lower low, lower high, lower low, double top, lower low. Yeah. We're looking for that move to kick in again on the pound yen. That obviously doesn't help you because you're on the pound odd, but pound odd, obviously what we've done is we've broken out of that high. But rejected. Look, we came back down inside it. And now we put in a lower high. But we are in a symmetrical triangle formation at the moment because we didn't get a lower low in. So that is either going to break high or going to break low. One or the other. But you've got some nice big propulsion gap targets to the downside. It's absolutely exhausted. There's no profit take move. You know, so they should really undo some of that, even if they're going to continue up. But there's no news catalysts at the moment to help you. But we will move on the euro as well. The pound is connected to the euro because obviously we are biggest trade partners with Europe. So when the euro changes strength, we go with it as well to a certain extent. So if we get a big drop on the euro today, if Lagarde suddenly says, yeah, looks good, everything's going the right way, so we'll probably drop the interest rates in March. It'll just start to drop, and then that might drag the pound down. Equally, if Lagarde says CPI is really, really stubborn, we're probably not going to do it this side of summer. Euro's going to pump. That will probably pump the pound. But obviously, the pound is not going to pump anywhere near as hard because it isn't the euro. It's the pound. So the news is on the euro, not on the pound. We've got 1.5 on the DAX. This propulsion gap isn't really a decent propulsion gap. It's part of just a rally, so it's just a big order inside the rally. That is the initial break, so that is where I would expect us to come and retest. But we are finding a little bit of support out of this at the minute. Look at this. Excuse me. I'm going to give it to the end of the week, and then we're going to the doctors. Percy's just stuck. No idea where it's going, is it? Anybody got any other pairs they want to have a look at? Let me know. Other than that, I haven't got anything else for you today. It's just a case of waiting until we get to news this afternoon, basically. It seems an awful long way away, that target. Miles away. 107? We've got 107 people in it. We've broken the 100 level. Good job. And did you even thumbs up this morning? See, those thumbs up we've been doing for the last 3 days, they work, don't they? Come and look, 30. Shush me. So we've got 100 people in it. That means 70 of you don't like me for some reason. I don't know why. Maybe it's because I'm in my gym gear this morning. I'm out of uniform. Sorry, I was late. Couldn't help it. But anyway, come on. Crack on with the thumbs, people. Use them. What's my risk on SIH? 0.3. So, thanks for subscribing, Duong. Good name. I like it. So, yeah, 0.3 on DAX and FTSE and 0.25 on the others. I think I'm 0.25 on all the others. Yeah. However, this is only because at the moment I've got it all running in one account. This was all running in 2 accounts. But I'm waiting for my funds to come out. They should be in today, actually, from DARWINX. So what I'm probably going to do is move them into a different one, into a different account. So the problem I've got is margin here, leverage. Yesterday, I was on a margin call. So if you remember yesterday, the DAX, I was out by New York. The FTSE, I was still in during New York. And then we got triple hedged on these 3. Yeah. So I had 3 hedges on. So when I took the exits up there and up there, I still had the FTSE hedged and I still had the Dow hedged. As soon as I took that one off, we basically got to 95% margin. So I had literally, because the margin call on Darwin X is 50%. A lot of brokers are 100% when you get the margin call and they shut your positions. I got 95. So, that horrible moment when your P&L flashes red at you and you're like, if anybody's had a margin call, this grey line here turns red. And the margin was 95. So I've got a problem with margin trading all 5. I can't really do it. But it does depend on what's a clean break and what's a hedge. If we get clean breaks across the board, it's not an issue. If we get 2 clean breaks and 1 hedge, it's not an issue. If we get 1 clean break and 2 hedges, it's not an issue. 4 hedges at the same time, it's within that much of shutting the positions, and obviously shutting the positions guarantees loss on all of them, which isn't, and then it's not the problem because it's a hedge, so you only locked in a certain loss, aren't you? But so I have got to be careful. So I'm going to, I think I'm going to switch it back to Robo, or what I might do is increase the account size in Darwin X and reduce the risk, just to give me that extra margin to trade all 5 in one account. I haven't quite decided what I'm going to do. Stupidly, I pressed the withdraw button on Sunday on Darwin X. And then on Monday, I was like, why didn't I just transfer it into this account and reduce the risk? Because I had full intention of moving all back into Robo Forex. But that was, just didn't think of it. And then all of a sudden I started trading this account. I was like, well, if I just top this one up, I won't get margin called. But obviously my brain farted. So anyway, thanks for subscribing, James. Welcome aboard. I'm in the H1M5 mean reversion buy position on the CAD Swiss. We only got into it yesterday, so there's not a lot to elaborate on, really. That was first entry yesterday. So we're in. There's not really anything else to discuss. If you're using, are you using the EA? If you're using the EA, obviously, I don't know how you got it set up, but I'm going to get out there on a retest of the reversal alert and high propulsion. So I'm looking for a pullback drop. Market structure shifting short. May well hit that. May well hit that. Might hit that. Might double top. I don't know. But I'm going to target that. See if I can get out there. Failing that, obviously, if it pushes down today, we've got good support coming up here. This whole area here, we didn't go through, and then we rallied away. So we're going to find potentially limit orders triggering there. And if it does drop all the way down to there with just that tiny little flag, we've got that entire move that they'll want to do a profit take on, in which case then second entry will be taken down here. Average will move down to there. So I can target then that propulsion gap and get out on that one. Could even get out on that one, but that'll be a tiny profit. So then just move targets down as the price moves down. All you're doing when you're position trading is you're moving your price and you're moving your target. So at the moment, there's my entry, there's my target. If price moves down, I move my entry down and I move my target down. If price moves down, I move my entry down and I move my target down. All you're doing is, as price is dropping, you're just dropping your entry and dropping your targets down with it, waiting for that pullback. At some point, they're going to profit take the leg that they've put in. You're getting out on the profit take. You just don't know when the profit take's happening. Typically, it happens from a support resistance area. Yeah, so if you were, for example, you wouldn't have been, but if you were short there, it didn't work out, so you shorted it there and it didn't work out, and you shorted it there, yeah, you could have got out on that, probably, but if not, you got out on that. And that move there is a profit take leg on that. So this is now either going to turn into bullish market structure, or it's going to turn into bearish market structure. We don't know which, but as long as you know what the outcomes are, which the options are, you can plan for both. You can exit, always exit. As long as you've got a plan, you've got an exit. And And this is why we're using small positions, because we don't know whether either of those plans will play out. At some point, one of those plans will play out. So that long there, I plan to get out of the propulsion up there. Didn't work out. So I took a second position down there and got out on both of them there. So my plan was to do that. That plan didn't work. And I knew that if they continued to drop on it, they would need to get out of a portion of that whole move before they decided what to do next. What they decided to do next was absolutely nothing for 3 weeks. 2 weeks. But that, I don't care about this. All I care about is that the banks take profit on their orders, which they do always, because if they didn't, they don't make money. So you know that one of two outcomes is always going to happen. One of those two is going to happen. Either that is going to get tested or that is going to get tested. Guaranteed, 100%. Come back in a month's time, I can guarantee you with 100% accuracy, either that or that has been hit. We know that. So all we do is we scale into both of those moves. We can't lose. Simple, isn't it? When you put it like that. Just got to be patient. It could take, if you look at it, to get from there to there took 10 days, 2 weeks. To get from there to there has taken about 3 weeks. So we're here now. How long is it going to take to get there or there? Considering it's taken 5 or 6 weeks for us to get nowhere, we might be in this for 6 weeks. We might be in it for 2 weeks. We might be out of it this afternoon. You don't know. You cannot time the market. You cannot predict where the market is going. You cannot predict where the market is going to turn. But you can plan for where the options are, and you just scale in according to those plans. One of them will play out. Every now and again, you'll get squeezed because plan A, they decide no. Plan B, they go for. And as they're about to execute plan B, a news event comes out and makes their plan wrong. So they get trapped along with you. And then you just wait for them to push back against the guys that are pushing them down. Yeah, don't forget banks and institutions are doing the same thing. They are also offside on positions. Every time a bank and institution is moving in one direction, they are either in profit on that move or they are in drawdown on that move. If they're in drawdown on that move, they will use their capital to push price back up to get out of that move. If they're in profit on the move, they will exit the move to make money. Either way, that thing's coming back up, dependent on which organization needs to do what and when. And you can't push. If HSBC, for example, are on this move and they're in drawdown because they are longing it, yeah, they will be pushing with money all the time. And eventually, they will keep pushing. And eventually, the guys pushing against them will go, we've made enough on this. Let's get out. They suddenly flip the other way to get out of their position, because when they've been selling to get out, they become a buyer. And they become part of HSBC's move. And now all of a sudden, price pushes back up again. Market structure. We just don't know when it's going to happen. And we don't know how far it's going to go before it happens. So your job is to survive that move, which is why we use tiny lot sizing. Not too tiny, though, that you can't make money, obviously. And there is where everybody has the problem, me included. It's difficult because how can you predict the lot size for something where you don't know how long you're going to be in it and how far it's going to go? You can't. So smaller you go, the easier it is. Higher you go, the more drawdown you take, the more uncomfortable you get, the more money you make. There's always a catch. Are you using H1 RSI 14 with H1? No, 21. Where's everybody getting this RSI 14 on H1 from? I've obviously got it somewhere. I've been using, a couple of people have mentioned it in Telegram. I've been using the RSI 21 on the hourly chart as long as I can remember. I switched down to, I don't even know when it was. Probably last year, I guess, I switched to 21 or was it the year before? I can't remember. But the answer to the question is I'm using the 21, but if you want to use the 14, use the 14. We looked at this yesterday. These are my entries on the 21. Yeah, those three. There's absolutely nothing wrong with you using the 14 if you want to. Use the 14. All that's going to happen is you would have taken an entry there, which I didn't. You'd have got in there, which I didn't. Might have got in there, but so that those are my entries on the 21, and you'd have got the same entries as me, but you'd have also got that and that. Well done. You win. Doesn't matter. It's different. It's not better. It's not worse. It's just different. Whether you use the 70, the 75, or the 80, up to you. It's just different. I don't know whether it's better to use the 75, the 25, or the 30. In that case, using the 30 or the 25 didn't matter. In that case, using the 25 means I missed that. If I'd have been using the 30, I'd have got that. Not right, not wrong, different. Up to you. I've always used the 14 on the 4 hour though. Because if you use the 21 on the 4, you find it a lot harder to get into trades. At the moment though, actually it doesn't make a lot of difference, as you can see. Doesn't make a massive amount of difference at all. Well, not on this instrument anyway. But I've always used the 14 on that one because I wanted it to be stronger, basically. So, but it really doesn't matter. It's, you know, it's just a different thing. You know, go and back test the 21 and the 14 RSIs. You see the 21 price has to have moved further, faster and harder to trigger an entry. The 14, it doesn't have to have been quite as strong. I'm looking for really strong moves to get in on, because the stronger that elastic band stretches when you get your first entry, the higher the probability of the snapback. If you're getting in when the elastic band is just stretched a little bit, yeah, it can go further and further and further. If you get in on the 80-20, it's massively stretched. The odds of it pinging back are super high. But you're going to miss all of those opportunities where it hits the 70, the 75 before it gets to the 80. Yeah. So this chart, for example, we're looking at here as just an example. If you're using the 80, you've had one trade, and it was that. That's it. If you were using the 70 instead of the 80, you had a trade there, you had a trade there, 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 and there. Yeah. So that one worked, that one worked, that one worked, that one worked, worked. I probably not. So didn't work, did work, out. Yeah. But go and look at another instrument and you will find that the 70 level didn't work because it pushed up. Didn't work because it pushed up. Didn't work because it pushed up. Yeah, it's instrument specific. This one just happens to be 100% strike rate bar one, but you got out on the second entry anyway. Yeah, so it really doesn't matter. But you switch this now to a 14, right? Now look at how many 70 entries you've got. You can't see these ones. I'm drawing behind my head, but there's 4 there. 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17 entries on the 14. Yeah, so you know, this is a range bound period of December. Yeah, this is absolutely spot on, perfect conditions, isn't it? It's not like that in the real world. But there is no right and wrong. Yeah, just pick one and stick with it. If you start mucking about with it, it's just not going to help you. Just pick one and use it. Really doesn't matter. you don't want to use the RSI, use a MACD or a CCI or something else. Yeah, it doesn't matter. It's an oscillator. It tells you when there has been a stretch condition in the market. The RSI needs a lot more to get it extended than the CCI and the RSI, than the CCI, the MACD, and stochastics. I mean, stochastics will get oversold if the bank farts, basically. You know, stochastics is bloody useless. It's too sensitive. But there's loads of oscillators out there. You don't have to use RSI. I like it because it measures relative strength between two currencies. And because we're not trading tangible assets, we're trading exchange rates, the relative strength indicator, in my opinion, is the better for Forex. So, but, you know, other people are using Bollinger Bands. You can use whatever you like. Doesn't matter. It really doesn't matter. Morning, Astro. The March 2023 set file was the first to use RSI 21. Was it? Right, okay. I still use 14 and it works. As you said, no difference, yeah. Yeah, so the set files I published from the original EA page probably use yeah, so this one, H1M5, isn't it? Oh my God. Yeah, 14. So the original set files that I published for on the product page, etc., they use the 14 RSI with a 68 and 32 look. Yeah. But again, not right, not wrong, but that is very, very unsensitive. So you're not going to be particularly stretched. That's more like the elastic band just about getting a bit tense. 68.32. But 68.32 are Steve Mauro's TDI levels, which is why they're used, because I first discovered the power of RSI through analyzing the TDI indicator, which Steve Mauro used in his sort of breakout reversion strategies, which was developed by Dean Malone. So, you know, nothing I do is groundbreaking. Dean Malone invented TDI, and all he got was he took an RSI indicator, slapped 2 Bollinger Bands on it, and 3 moving averages, and he coded it the TDI indicator. Basically, it's an RSI at the end of the day with an oversupport and an oversold level. And he uses the 68 and 32 levels, but the 68 and 32 were designed to be traded on low time frames. Yeah, on low time frames, after you get a 68 and 32, you're measuring intraday movement within ADR. On the RSI, we're taking news into account and all sorts of other things on higher time frames. So 68.32 on the higher time frames is a little bit too sensitive. And also, I think the 14 is a little bit too sensitive. But in contracting, you're going to have very good results using a faster TDI, a faster RSI like the 14, and lower levels. But when it comes out of contraction, you're going to get in way too soon on big squeeze moves. Again, there's never a right and a wrong, because you don't know what the market's doing next. If we knew what the market was going to do next, we'd know which RSI to use. This is why backtesting is useless, because you can backtest something. You can say, right, over the last 5 years, the RSI 21 at 80 is the best to take because it gave me a strike rate of 90%. Go and take that exact setting and run it back over 15 years ago. And you'll suddenly go, actually, the 70 was better. Yes, because it's different time. Market was different. Market's different. Market will be different in the future. So what works now isn't necessarily going to work as well in the future. It will work. Doesn't matter. And this is where system permutation testing is absolutely critical. I have tested my strategies using the 70, 75, and 80 levels on the 14 and the 21 RSI. So I have a system parameter permutation test there of 6 different variations of one indicator. They are all profitable. So what does that tell you? It doesn't really matter. When the market's gone up, it will come down. That's all I need to know. Which one works best on every single trade? You will never find out until that trade has played out. You can't. It just doesn't work that way. But the bigger you use and the more sensitive, the better results you'll get, but the fewer entries you'll have. So if you want to go in with 5% of your account on every trade, use the 21 80 RSI or 85. Yeah, you hardly get an entry on it. But when you get in with 5% of your account, you're 95% sure that thing is coming down by at least half to 1 ADR. Yeah. Great for prop. Yeah, look at this. So that measurement there, we've got to 16. So that's not even high enough. There's one there. Can't see, it's behind my head, but there's one there which measures 13. Yeah, so that was a 13. Markets like, holy crap. You still had to wait a week. That looks very, very similar to pound odd and pound yen, doesn't it? Except it's inverse. Yeah, nothing's better than anything else. Everything's just different. We're not going anywhere on the indices today. We're just sideways flat. I said I'd take it off at 1R. This is exactly what I was expecting this morning. So either we are going to do that, or we might get a second wind and just grind down to 2R. If we grind down to 2R, it's probably worth taking the whole lot off, but not a lot we can do with this morning. It's just a mess, isn't it? So shark fins, yeah, that's Steve Marrow's shark fins. It's all the same sort of stuff, isn't it? Yeah, I mean, it's all a shark fin basically is an RSI extension, it's an RSI extension. This is what he said. Wait for the TDI, wait for a shark fin on the TDI. No, what you mean, Steve, is wait for the RSI part of your TDI indicator to give you a over extended condition followed by a drop. One of those, basically, isn't it? Think about it. But this is where all these sorts of strategies fall down. There is no definition of an exact shark fin. It looks something like, I think you'll remember him saying it in his course. It looks something like that. Well, what does it look like exactly? Something like that. So someone will go, hey, look, there's a shark fin. And you go, no, shark fins need to be tighter than that. And then someone else will go, no, shark fin can be over a couple of days. Well, that's more of a humpback whale. It's all discretionary, isn't it? At the end of the day, if the RSI is extended, markets moved up. Markets moved up, markets coming down again. That's it. So but because he was trading M5 and M15, you needed that fast movement. Typically, you would find that somewhere around the average daily range of the instrument. I think in Steve Marrow's case, he had a box, didn't he, as well? There was wasn't there a kind of a hit box? I seem to remember hitbox type thing. So when it got into that hitbox and you got an RSI extension or a shark fin, you took a short. Long time ago I did that. Long time ago. But it all worked. It's all pretty much the same thing. But except he was looking for a technical reason. But what was actually underlying it was bank movement. If he'd known about bank movement, he probably wouldn't have drawn boxes at 50 pips. And he would have realized that 50 pips has got nothing to do with movement. It's to do with the average daily range of the instrument. Close. Stop hunt. Yeah, stop hunt. Hey, look at that stop hunt there. Wow, all the retail traders are liquidated. They're not. Banks don't even know we're there. 25 pips it was, yeah. See, this is the thing. Look at 25 pips. This is the CAD Swiss. The ADR on the CAD Swiss, I can't see, is 43. So basically what he's saying is you draw a box half an ADR away from the open. All right? And if it hits that, you short it. If it hits that, you short it. Yeah. Now let's go to the pound New Zealand and draw a hit box 25 pips away from ADR from the open. All right, it's there. All right. So if we get there or somewhere about there, we go long or short. This thing's average daily range is off of my chart at the moment and right up there. Why would you go short there and there? You can't use pips. If he'd have said, when prices moved 3/4 of an ADR, that would make total sense, because on pound New Zealand, 3/4 of an ADR is 95 pips. On Euro CAD, 3/4 of an ADR is going to be about 41 pips. Aussie New Zealand, it's going to be somewhere in the region of 23 pips. You can't use 25 pips, can you? This is why nobody ever made any money with it, because everyone was going, oh, look, I'm going to put a short 25 pips away. Look, it's hit 25 pips. Yeah, but it's got bloody miles it can go up yet. Oh, it's gone through the box. Yeah, because it's on its way to its average daily range. Why would you get in there? Nuts. Oh, the things we know now that we didn't know then. Double tops. Look at that stop run. It's a 1 pip stop run. No, it's not. It's a double top. Shut up. Shut up, Steve. It's my new saying. He was close. Was it the other saying? He had a saying, isn't it? Was it? Don't trade until they've hit the stops. Whose stops, Steve? Yours? Don't trade until they've hit the stops. Okay, they've hit the stops. So where am I going to put my stop? There. What do they normally do? An uneven end pattern reversal. What's that doing? Hitting your stops. So what do you want me to do? Trade again? And then they hit my stops again. Oh, hang on. Market structure's going up. So I'll just keep going short and getting my stop hit until it comes down. No. Stop it. Sorry. I'm very skeptical about every single course I've ever done. For good reason. None of them work. Right. I'm going to leave you there because this is like pulling teeth. Nothing's happening. So hedged on the FTSE. Can't do anything with it. If you fancy an aggressive exit on this today, watch the highs and the lows from yesterday. Failing that, that is a better exit if we can get there. I don't think we can get there. So there is a good chance we're just going to stay in rotation today until 115. So if we can get a hit to the upside by 115, I think there's a good chance you could get out of it. But you're not going to get out with much money because it's 2R actually. Yesterday's high. So yeah, that is a 2R upside. So it's a decent return. That's an option. The DAX, I mean, it's just not going anywhere. So I'm short only on it at the moment. If it breaks down, brilliant. If it hedges, I'll wait for the announcement because the announcement is going to move the DAX. So we will see how big that move is in the euro. So what I will probably do this afternoon when the announcement comes out, if I'm hedged on it, I'll be obviously TPs will obviously all be dropped down to 5R and pushed up to 5R. So what I'll probably do is move them right down out of the way and just see what we get. Because what I don't want is a massive great spike that drives down to 125 ADR because Lagarde says they're going to increase the interest rates or something ridiculous. But it would go up, but no, it would go down. and just get, TP'd there, because you don't want to have a TP during a news spike, because you're going to get out there and that is going to add massively onto your drawdown. And also, you're not going to be able to get an aggressive exit because pending orders go above the high. And if there's a news spike, 5-minute candle, that's your pending. So it's not, you got to be very, very, very careful. As we know about news, news can go mental, can't it? So I'm just going to watch this one and play it by ear this morning. I'll post in Telegram if I get out, obviously, or if I decide to do anything with it. But looking at the price action, there's not really any options, is there? So, Youssef, and it costs $10,000. I'm not sure it costs $10,000, does it? Is he even still going, Steve Mauro? One of those people that... oh, yes. Real beat the market maker. There he is. Oh. No, he's gone. Or is he? Is that him? I don't know. The trouble is with social media accounts, is it or isn't it? You never know, do you? I can't get to that. But someone's doing some Steve Mauro stuff by the looks of things. Yeah, that's his logo. That is him. Still going by the looks of things. Oh, my God. Look who's come up. Mr. Prop Firm. You bought my course. You haven't made any money with it. So come and join my prop firm, everybody. Let me take your money that way instead. Sorry, Nirav. Fortune's funding. Guys, you're going down the prop route as well? Yeah, this is his chart, isn't it? Look. Those are the boxes, are they? Are they the boxes? I can't remember. Asian session. That's the boxes. Look. Perfect example, look. Always gives a perfect example. Oh, he's trading futures as well. Trading jigsaw. Well, that's not actually, no, that's not jigsaw, is it? That's Bookmap software. Same stuff. There we go. Anyway, that was a blast from the past. Haven't looked at his stuff for a long time. Don't go off on the Steve Mauro hunt, because all you're going to start doing is reintroducing stops and you're just going to lose money. So up to you. Right, I'll be back this afternoon. Anything you need, let me know. 2:20 for the New York session. Back tomorrow morning, 7:50 for Frankfurt. Good luck with these this afternoon. Fingers crossed for the DAX. If the DAX can drop, I can get out and profit. That pays for that, and we'll just write the morning off, which is fine. And then hopefully we'll get some movement on the afternoon. So 1:15 today is Euro rate. GDP at 1:30, and then press conference at 1:45. I'll be on, obviously, 2:20. So by the time I come on, Lagarde will have probably finished, so we can analyze all the whatever she's said. And obviously, we'll see what happens with the euro. If you've got profit on any euro positions, that is bankable, which I haven't at the moment on any account, I don't think. I haven't got anything bankable. You can bank it before the news if you want to, because obviously if you've got profit that you can bank and it goes against you, you can't bank it anymore. If it goes your way, yes, you would have made more money, but if it doesn't, you can't bank it anymore. It's unlikely, I think, we're going to get a fundamental shift today because CPI hasn't moved enough. I very much doubt she's going to say anything that is going to upset the market in a big way, i.e. change the fundamentals on it. But you never know. So it's always better to have it in the bank and spend it than go, oh my God, I could have made 3 times as much. Yes, you could also go into drawdown for 3 weeks. I'd much rather have it here that I could spend than have something that could have made me more money. I can make money later, but I can't get out of anything that goes into drawdown without the market moving back in my favor. So better to bank. Although if you're trading as I am, then there's nothing there anyway, is there? Euro Swiss, but it's half 0.05. I'm not banking that. Can't be bothered. Cost me more in swap. Right, so I'll be back this afternoon. Anything you need, let me know. Other than that, I will see you in the next one. Have a good day.